for Bitcoin to actually have a sustainable move higher, I learned a very valuable lesson this year. The boogeyman of the 4-year cycle, which you can tell me about, because I'm not smart enough to understand this whole, ooh, this is going to be a crash that happens. And I go back and look and I see, well, in 2017, right around this time period, it was the peak. 2021, oh, I get it. So that's 2 data points. I don't really live off 2 data points, and maybe there's one in 13. I didn't go back to look. It was still too new. But if you can tell me in front of everyone watching right now why I should be worried about the 4-year cycle, and then I'll give you a reason why I'm buying it aggressively every day.
This new reality has transformed markets into emotionally reactive ecosystems, where small ripples quickly become waves. The panic just grows quickly, Visser explains. In 2025, we're not trading data. We're trading human reaction time. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I remember when Twitter first entered my world of like, wow, in the markets, you got to pay attention to this thing. Like you're getting news that isn't coming across my Bloomberg at the same time. Even if it's rumors, you're catching stuff. So here we are now. You fast forward, it's probably a decade later. And back then, and there's still some hedge funds that can't use Twitter, or at least banks and things like that. The panic just grows quickly, but it's this thing that has shocked me that you and I have gone through this year, which is, if we laid back and said all of the panics that have occurred, and I said last week that, hey, you kind of at nighttime, I'm warning my son, like, there's deer out there when it's dark. And
I mean, you nailed it. You were like 3 hours early.
So all that took was a tweet. AI bubble. People are, I mean, they're all over this AI bubble. And just so people hear this, there are always bubbles in the market. Just like Jim Cramer likes to go on TV, there's a bull market somewhere. If a market is going up, there's a bubble somewhere. So define a bubble as 0 revenue companies are trading at high valuations. So whether it's Oklo, whether it's Fermi, whether it's a lot of these energy names which don't have revenues right now, you can categorize those as bubbles. They're not the entire market. What dominates what happens in the market is nominal GDP, inflation, so you get back to real, and you get to a scenario where earnings follow nominal GDP. So everything is fine. But to get back to your point about Bitcoin, whenever this kind of situation happens that everyone's panicking, and it's something that should be expected, China and the U.S. have to come to a deal. I'm going to say this again and again. Rare earth is the most critical factor in the world. It has been all year. We've watched tariffs be a fear. We've watched stagflation be a fear. We've watched inflation be a fear. I can't even remember everything that we've had to talk about here as fears. But now we have bubbles and we have credit risk, and the world's going to end. For Bitcoin to actually have a sustainable move higher, I learned a very valuable lesson this year. The boogeyman of the 4-year cycle, which you can tell me about, because I'm not smart enough to understand this whole, ooh, this is going to be a crash that happens. And I go back and look and I see, well, in 2017, right around this time period, it was the peak. 2021, oh, I get it. So that's 2 data points. I don't really live off 2 data points, and maybe there's one in 13. I didn't go back to look. It was still too new. But if you can tell me in front of everyone watching right now why I should be worried about the 4-year cycle, and then I'll give you a reason why I'm buying it aggressively every day.
Buying Bitcoin.
I'm buying Bitcoin all the way down to 100. I have bids under 100. One of them is just like TradFi. So in my trying to understand, so when I have a view and it doesn't happen, and I thought we'd be much higher in Bitcoin right now, given all of the things that I expected in terms of the expansion of kind of the network effects this year, we've seen stablecoin market cap go higher and Bitcoin's not going higher. Bitcoin's like the same price it was in December, to give you an idea of how little it's gone. We've got gold going higher. So we've had this year, we've got money supply growing. You've got everything that you would expect happening, including the stock market going higher. And Bitcoin has just not had the normal beta that it's had. But the TradFi world always has this thing that it comes into beliefs, whether it's before presidential cycle, you'll see all these seasonals come out and people believe them. And seasonals work until they don't work. And if too many people are worried about the seasonals, what normally happens is they sell in front of it. And in September and early October, it was very clear to me and the people I was talking to in the space that there were a lot of whales / OGs, people that have made a lot of money that were selling, and it would kind of make sense in the 4-year cycle. But you said something very important. I just want to make sure people hear this. So my job in coming over from the traditional finance world as a macro person is to think about what I think the equity markets are going to do next year. So I believe that a lot of people think there's an AI bubble. There's not even a question. It's all day long. It's nonstop. I will continue to tell people, if you want to make the mistake of believing that AI is a bubble and then lose money, I don't give a crap. This year, for everyone who's bearish AI and thinks it's a bubble, the only thing that has saved them is one thing. I'm long gold. Give me gold. And that's been, if they're bearish AI, the thing that has saved them this year is to be long gold. So my gut tells me,
crazy uncle market.
Yeah, exactly. So my gut tells me the pain trade for next year is gold doesn't work and the AI doesn't bubble. And then everyone has to go pick something to buy. I thought that was going to happen this year, not with the gold part, because I think gold long-term is going to go higher. But a China-U.S. deal is critical to this whole situation. So what has led me to believe is that I do believe people were selling Bitcoin ahead of the 4-year cycle. Great. So then the way I deal with everything in the traditional finance world, just like it was before, any period that people believe, if you take out the highs before that, so now 126 has been set in stone. The reason I'm buying Bitcoin is because I think when we get through the all-time highs again and basically get rid of this 4-year cycle belief, now there's no imaginary place for people to ever again care about. And that's normally what happens in equity markets. And oh, by the way, 2017 was the end of the Donald Trump tax cuts. Well, we've had tariffs this year. We've had bad stuff happen this year. The equity market in 18 was bad. At one point, it was down 20% year to date in December. In 2022, the equity market was down. So the one thing about the Bitcoin halving cycle, it seems to have been trading with traditional finance markets. So when you say that Bitcoin's 4-year cycle is going to play out next year, you're also embeddedly saying you don't believe in AI and you don't believe profit margins are coming and you don't believe the earnings are going to be higher and the S&P is going to go higher.
And you don't believe that the Fed's going to cut interest rates.
Yeah, exactly. The Fed's going to cut rates. And for all the dot-com bubble people out there, just remember, the Fed was raising rates into the dot-com bubble. For some reason, everyone highlights the fact that the Fed cut rates in 98, but they had to turn around and raise rates going into 2000. And we had the Y2K problem. So there's a lot of things with the dot-com bubble that just don't hold.
Still, Visser remains bullish on Bitcoin, buying it daily, even placing bids down to 100. His thesis? Once Bitcoin breaks its all-time highs again and invalidates the 4-year myth, a flood of institutional disbelief will wash away, creating a new foundation for adoption. That's normally what happens in equity markets, he says. Once a narrative dies, the real rally begins.
So, Michael Semblist, who has a free podcast and a free write-up, he did this whole thing on gold and central banks, and he made this great point, which again just shows that you can create a story out of whatever numbers you want. It gets back to the central bank thing, and this is not to say that central banks haven't been buying. But when you do central bank gold reserves as a percentage of reserves, it shows them going up, but it doesn't adjust them for the gold price. So their percentages have gone higher, but that's because when gold's up 60+% in a year, well, then no other currency reserves are moving that much. So they're a part of that, and a good portion of it has been the rise in gold, which means a lot of the buying that's happening in gold is not just central banks. It is absolutely positively wealthy people. And when Donald Trump put the tariffs in, I think, whether it was Russell Napier, whether it was all these people that did this whole capital flow argument, it made sense to me. It still does. And so that's why I don't think gold prices are going to go down. And there is a chance that if China and the U.S. come to a deal, that gold prices go higher. But I think it's more likely that people are going to be very, very angry with gold by the time we get a year from now. And it's not that I think it's going to collapse. It's just that a lot of this is retail. A lot of this is momentum. So you can't have it both ways. You can't say there's a bubble in AI. Look at these charts going parabolic and go, but gold's not in a bubble. It's not the same. The reality is there's all this stuff going on. And when the Fed cuts rates, if people want to say, well, that's good for gold, I think they should go back and look at 2010 to 2016 because QE was happening. We had negative yields around the globe. And if you own gold from like 2010 to 2016, it was a horrible asset to own. even though we had negative real rates, even though we had QE going on at every time. I think people need to focus on stocks from an earnings perspective. And I would say the non-Mag 7 stocks, because profit margins are going to explode next year. And the infrastructure names of AI are going to continue to explode. And I think they are just going to have to realize that the 4-year cycle also is the stock 4-year cycle, a connection. And the reason is when people do buy gold, there's no doubt that it's a fear trade. So this year, aside from the things I mentioned, the stagflation, the inflation, there's also been the government's going to default. So JGB yields have been very correlated to gold over the last 3 years, and they've just gone higher. And JGB 30-year yields are actually doing something interesting right now. I'm a big fan of when you get news that's supposed to continue a trend, and it actually be news that stops a trend. Right now, JGB 30-year yields have gone back down. They gapped higher and everything kind of went in when the election situation went in. But now all of a sudden, it's gone back down. I think this is a characteristic of the fears coming down. And I'll say this repeatedly. I'll tweet about it. I'll do everything. Can I say tweet? Is that still?
Yeah, you say whatever you want.
I can do whatever I want.
You called the market crash last Friday. This Friday is your show.
The China-U.S. deal is far more important when it occurs. And I do believe it will occur, whether it's in November or whether it's in December. When it occurs, I think people have to sit back and take a look at what this agreement is going to mean. Because for this year, we've had a lot of problems. The Chinese export numbers came out over the weekend. They were up 8% year over year. The Chinese exports to the U.S. were down 27% year over year. This has never happened before. So this has been a year where China has been kind of redirecting flows. They haven't bought any soybeans. So on the import side, they haven't done it. This is a trade negotiation, which has left a lot of people kind of worrying about what's actually happening. There's a lot of businesses in this country that get stuff from China, and they can't get them right now without tariffs. And so you've had this kind of disconnect. A deal happens. This is a major event for the world because it basically is going to mean a lot of things that I think people have been worried about. And gold is a worry thing. So where Bitcoin fits in is, if people aren't worrying as much, then Bitcoin goes with the other side, which is stocks. And that's why I'll say again, I believe stocks will be higher next year because the AI situation that people are going is not only accelerating, it's picking up a pace. And all of the tea leaves that I've read over the last 3 weeks in podcasts are people are not underestimating where we are in AI today. They're too focused on where it was in the past.
It's this kind of learned memory, how the market internalizes past pain, that drives collective behavior. The 4-year Bitcoin myth, the AI bubble talk, the gold obsession, all of it, Visser suggests, is a reflection of past trauma masquerading as foresight.